Good evening and welcome back to Be Rich. Today I have my good friend and my nephew Shashwat Swaminathan with me to discuss recession and inflation. Let's find out what Shashwat has in store for us. What do you say? What do you want to discuss today, Shashwat?
So recently, there's been this topic everywhere online and in newspapers and stuff, which is the incoming recession in the Fed in America caused by the Fed. And you've talked about this, but we've talked about this before in multiple videos, and you've talked about it in multiple videos and interviews. So I want to understand a bit more. So people talk about what the Fed is doing, what the Fed will do, but I want to focus on what will happen after the Fed makes its move. Let's assume that your interest rate hikes are going to come anyway, as Powell has promised in his minutes of the meeting. Let's assume that, and let's see what's going to come after that. So I have a few specific questions regarding that, and I also want to touch upon cryptocurrencies again. So the first question I have for you. So I want to give you a few data points before I ask you the question. So I had already in one of the videos before we talked about an inverted yield curve. We said that the 2-year yield and the 10-year yield curve on the Fed is inverted. So I'll give you the numbers for that. The 10-year yield is 2.95% and the 2-year yield is 3.03%. So yeah, the 2-year yield is above the 10-year yield.
What the inverted yield curve shows is that there is going to be a recession. That means normally when you lend money for a longer period of time, it should be more costlier than money borrowed overnight or short-term period. 2 years is definitely a shorter period than the 10 years. So therefore,
5 times the duration.
5 times the duration. There should definitely the 10 year should be cheaper than the 2 year. 10 year should be costlier than the 2 year.
Yeah.
The fact that the 2 year is costlier than the 10 year shows there is an inverted yield. That is, in the short term, people demand money. In the long term, people don't want money. When in long term, people do not want money, that means investment is coming down. If investment is coming down, it means there is a likelihood of a recession. But before this, I want to say something.
Yeah.
The entire 1970s was spent on this inflation. The inflation boogie started in 1974.
Right.
And it continued over 3 Federal Reserve presidents. And the third one was Paul Volcker, who put it to an end. The Fed normally does not do what it promises. Today as I speak, I don't know when this is coming, but today as I speak, the Fed today is supposed to be a peak inflation in US. People are predicting it may be 8.8, but
the numerics are supposed to come.
The numerics are supposed to come tonight. If it is 8.8 as people say it would be, then you can pencil in a 0.75% increase in interest rate. But what people like Larry Summers are warning is, from 8.8 to 4 is going to be very fast. It will happen in the next 12 months. So it will come to 4. The most difficult point is to bring it from 4 to 2, which is the Fed accepted level. When comes from 4 to 2, that's when the peak recession is going to be and unemployment is going to rise.
You've hit the nail on the head. That's exactly what I wanted to talk about.
Yeah, let me finish.
Yes.
What Larry Summers fears, and I believe is true, is then there will be the American election. 24.
Yeah, 24.
So 2024 is a new president.
Yeah.
So there will be enormous pressure on Jerome Powell not to tighten. So whether he will continue the course is something which is very difficult. It has never happened in the history of the Fed that inflation has been completely crushed without real rate being positive. Right? Now the inflation is 8.8. You are 1.5 or 1.75. That means you are nearly 6% negative. Right? For this rate the rate has to become positive before inflation is crushed. It's not in crushing prices that matters. It is crushing inflationary expectations that matters. So unless you crush inflationary expectations, there is nothing going to happen. So when I say after the Fed increases interest rates, somewhere along the way when the Fed is increasing interest rates, the economy will tip into recession. And it will be a deep recession in the sense that people will be out of jobs and they'll be howling on the other side for relief, as it happened in case of Paul Volcker.
Yeah.
So at that time, is he going to tighten more? Is the question, that is the $1 million question that is there.
1 second, before you continue, there's another data point which I want to give you. So we've looked at the 2 and 10-year yield curve, but this is the interesting part of the data. The 30-year yield and the 5-year yield curve, the spread is actually increasing in the sense that they're actually moving apart. So the 30-year yield is 3.16% and the 5-year yield is 3%. So what does that mean for interest rate expectations and inflationary expectations? When people are saying way off into the future, we expect inflation.
I think 30 years is too, this is my personal thing, 30 years is too far into the future. And 5 years, we don't know what Powell did a U-turn in matter of years. When he says
few
there is no
months.
inflation,
Yeah.
then he said there is inflation is transitionary. Now he says inflation is entrenched. All in a matter of few quarters, a couple of quarters.
That reminds me of the Keynes quote: "As the facts change, my opinion
Yeah.
changes."
So it's impossible for me to say what is a 5 year, what is going to be happening in 5 years from now, and what is going to be happening 30 years from now.
Yeah.
So that is, I don't want to go so much into the future.
Okay.
Another Keynes quote: in the long term, we are all dead.
True.
True. So 2 and 5, 10 is where I would stick to. And definitely there is a recession because the Fed is going to tighten. You have had not only tighten interest rates, there is going to be quantitative tightening. What is quantitative tightening? The Fed has been buying mortgage-based securities, corporate bonds, anything you can throw at it, and forcing investors away from safe assets like the treasury. And they have been forced to buy riskier and riskier assets. The Fed was guilty of buying mortgage-based securities when housing was on fire,
Yeah.
when housing prices were on fire. Now what it has done this month, this is what I heard from America, that they are going to stop bonds which have matured, they are not going to buy back, it is going to be allowed to expire at the rate of $45 billion. And they will slowly expand it to a point of $95 to $100 billion. That means in the next 12 months, you can safely say $1 trillion of balance sheet expansion would have contracted.
Right.
This will have a twin effect. One is you are increasing interest rates, another you are doing quantitative tightening.
Yeah.
So this will mean that huge sums of money are going to flow from the rest of the world back into America. All the dollars left which left home and are in different parts of the world are going to come back here because interest rates are going to be higher here.
Yeah.
The Japanese yen is at a 30-year low. The euro is at a going to break at par. It's almost at par. So definitely the dollar is going to strengthen further.
Okay. That brings me to my next point. So, while looking at personal consumption, expenditure, inflation, it shows, at least in the US, it shows that in the past, except for Volcker's era, where you strangle inflation and put it to sleep, apart from that regime, most recessions, if not all of them, have curbed inflation by a few percentage points, if not by a 0.5 or 1%. But inflation has usually been persistent in staying at some level, if not at the pace at which it was during the peak of the bull cycle. But for the most part, inflation has stayed at in some form.
This is what Larry Summers says. When you begin to tighten, it's going to fall from 8 to 4 is going to be very fast. It's the 4 to 2. 4 is where it will stagnate. Where if you don't take your foot off the pedal at 4, coming back from 4 to 8 is going to be equally quick.
Right.
So the Fed has to stamp down inflation and bring it below 2 before it can take the foot off the pedal. This means a lot of unemployment, a deep recession, and slowdown of corporate America. But you had a party for 20 years. So this recession will be good for America if America has the guts to go through with it. You have to cull people who are not profitable. You have to cull inefficiencies. You cannot be borrowing money for free and blowing it up on companies which are never making profits.
SPACs.
SPACs. And you cannot be making wild bets on cryptocurrencies. You had big influencers.
Right.
People like Naval Ravikant praising
Bitcoin.
Bitcoin.
Yeah.
And saying that's the future. That shows that Naval Ravikant, though he is a very big influencer on
Twitter,
he has basic clue of
what is happening,
what is economics and what is currency.
And we have people like them influencing people.
So, and the moment, this is because Naval Ravikant has not seen a recession before in his life. That is, he has not seen a period where the Fed will tighten. Because the last time the Fed really tightened was in 1980. I was 13 years old. That's nearly 42 years back. I'm sure Naval Ravikant has not seen it.
This is why you say read history.
He read history.
Okay. You had talked about how Larry Summers said that going from 4 to 2, that's going to be the real difficulty. So this is the next question. So how do you think Keynes' concept of sticky wage price inflation plays into what concept you had just talked about?
See, I have told you.
Yes.
That Starbucks is unionizing.
Yes.
Amazon is having problems with daily labor. All service industry in America is finding it tough to recruit people.
Yeah.
So people do not want to work below a
certain level.
The nanny state takes care of them.
Right.
At the same time, you are not allowing immigration freely to happen.
Right.
It's not only US, it's more true a case in UK, where after you cut the European Union, you will
Brexit.
cut with the European Union. The Eastern Europeans are not coming up to do the dirty jobs. At the just after as the COVID pandemic receded,
Yeah.
they couldn't find drivers to drive trucks to deliver goods for Christmas in time for Christmas. And there was a shortage of petrol because there were no truck drivers, and so they had to
A shortage of petrol because they had to deliver. Okay.
they had to deliver.
Right.
So Boris Johnson was forced to issue 100,000 special permits to get drivers in. The British men did not want to be a trucker at the price offered by these companies. They were demanding higher wages. Two airlines, Eastern Airlines and United Airlines, have now settled their pilot wages at 16 and 20% more. This means, for me, all signs show that wages in America are going through the roof. People are demanding more to do the same work. This is wage inflation. When wage inflation sets in, you have no other way but to raise interest rates very harsh
And take away freebies.
and take away you won't take the freebies.
You can't.
So the interest rates have to go up.
Right.
And you have to crush inflation.
Volcker style.
This has to happen. But if Jerome Powell does not have the guts to do or the stomach to do it,
Yeah.
what is going to happen is that at halfway he will let it.
Right.
And he will again bring the punch bowl, fill it up. There will be a big rally. There will be big celebrations. And this 4 will go back to 8. And that will become even more difficult.
Because you already have this stuff stored in.
Yes, no, see, there is a big difference.
Yes.
Most of us think that economics is science. The problem with Naval Ravikant and other people, they think economics is a science.
Right.
Economics is a social science.
Precisely.
You cannot falsify.
Pauper.
I can falsify in science. I can't falsify in social science.
Yeah.
Right? So there is, and the other thing is, Soros pointed it out.
In alchemy of
And the alchemy of money, I need not trade the market. Today I speak to 1 million people follow me. So if I talk about a stock, it will move the price of that stock reflexively.
Yeah.
Irrespective of whether I buy or not, the very fact that I'm talking about it will move the price. Maybe ITC is too big for it to move. But if I pick up a penny stock and I irresponsibly talk about it, the price of that penny stock will move up.
Right. So it becomes crucial that people with a large following.
You cannot.
Yeah.
And this is since you brought up cryptocurrency,
Yes.
this is exactly what has happened in cryptocurrency.
Yeah.
People forgot the difference between an advertisement and an influencer.
Yeah.
An advertiser, you know it's an advertisement,
Yes.
right? You don't believe that advertiser. It's an advertisement.
They're trying to bring your awareness to it.
They are clearly, it's an ad.
Yes.
Whereas a financial influencer is a person who peddles it as an advice.
Right.
So he carries a greater credibility. That is why on any of my platforms, I do not endorse any product. And I say, I recommend a stock, go and do your research. I very clearly, if I recommend a platform or I recommend a product, then you have to ask me what is my incentive to do it.
There has to be some incentive.
There has to be some incentive for me.
Right.
If I say there is no incentive,
Then
clearly then why will I recommend a product?
there's something malicious going on.
There is something malicious going on.
Right.
So that is why I repeatedly say, whatever I recommend is approved by either of these three guys, either SEBI, RBI or the IRDA.
Right.
Right? And I don't directly peddle it on my platform.
And you clearly state that you're not a
financial advisor.
Yeah.
You want to come to me for advice, you are coming separately, off the channel.
Right.
What I'm telling you is off the channel,
Yeah.
not to the public for its consumption.
Yes. That is the responsible way to conduct things.
That is the way to do it. But if you have people saying, put 10% of your money in cryptocurrency, and it is called crypto deposit, and somebody has 1 million followers, people are going to take you seriously.
And that in turn is going to affect the market.
That is social science.
That is social science.
The very thought that an influencer is able to talk the market and move it, affects the market, is a social science. This is what people like Naval Ravikant fail to understand, and this is what the great Soros said.
Right.
And that is his link with Popper, where he says, what cannot be falsified is not science.
And good that you brought up reflexivity, because the Fed, even releasing minutes of the meeting saying they're going to raise rates thrice or 4 times or 5 times is a reflexive action in and of
This is
itself.
exactly why I believe that Jerome Powell will leave the job half done.
He'll leave it half done.
He will leave it half done. There is a presidential election coming.
Right.
Right?
2024.
2024. The inflation, there is going to be a severe recession in America. He will be forced to loosen the tap even before the inflation
Is subdued.
subdued. Everybody is not a Paul Volcker. Why do I say this? Because for just getting reappointed, he kept on saying
Inflation
inflation
is
is
transitory.
transitionary. Whether it is coincidence or whether it is by design, I do not know. We'll continue this conversation with Shashwat. I hope you enjoyed this conversation. Thank you for watching Be Rich. If you liked our content, kindly subscribe to our channel, hit the like button and turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support to Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.